Alright guys, right now is about August the 13th. It's about 4 a.m. and I'm getting up right now to do a technical analysis for you guys. Okay, so I'm sorry for not being up earlier when this drop happened, right around here. Okay, between I'd say about 8 p.m. and about 2:30. I was actually a little bit preoccupied. So I ended up missing a pretty much right around here. Over 7 hours, I missed a 10% run there. Yeah, I was just hanging out with my friend. It was actually a really relaxing evening. And one of the most relaxing evenings I've legit had in a freaking long time. My friend just wanted to take me out. Not sure if it was a date or not. We'll see. And all that we did was we went to this place in the city, and we were gonna go to eat dinner, but she's like, "Why don't we just get takeout? I got a blanket. Let's go to this cool place that I know, where like nobody's gonna be there, and we're just gonna put a blanket down and eat." I'm like, "Okay." Grabbed a bottle of wine, went there, hung out for like 2-3 hours, and came back to my place for a movie. It was awesome. Sometimes something that comes to you, you least expect it, right? Kind of like this bull market when I was busy tonight. I did not expect it to kind of land in my lap and me missing it entirely. Anyways, back to topic, okay? I'm not going to overwhelm you guys at 4 in the morning with my private life, okay? So let's do this from a very detailed perspective of the daily first of all. On the daily perspective, this is what we have for Elliott Wave, okay? So you guys are gonna get this video for free actually, which is kind of cool. So that's the first wave, that's the second, that's the third, it's the fourth right here, and clearly that's an extended fifth wave, okay? Right there. And then we say to ourselves that the 1618 fib extension right here ended up hitting 1618 on the nose. Right here is where I'm talking about. Maybe I should probably extend it further just to make sure it's accurate as well. Right around there. So we hit the 1618 right around there. So now what I was going to predict was, of course, we were going to hit near the middle of $17 resistance between the 3618 and the 4.2. I'll just say 4.2 instead of 4.236. So I anticipated somewhere around the $17 region right here, and 20 cents up, just in case we were kind of slightly in the middle. But we actually ended up hitting exactly at the 4.2 region right now, and this is on the daily, and we're getting a fairly bearish candle right now that's already starting to form. So now that we know this is most likely the first impulse wave going to the upside, we say to ourselves, well, what section do we have to count next? So I'm just going to keep highlighting these as we go. So the next section is this one right here, that is to me an extending fifth wave diagonal. So I'm going to keep that highlighted just so you guys know exactly what time frame I'm looking at. And now I'm going to look at a lower time frame. And we're going to try to break all this down by Elliott Wave, and we're going to see where it is. Okay, so I'm just going to draw a line there instead. It makes it a little bit easier for now. So you guys see me right kind of there, right? So we're going to try to break this down right here. So we were not supposed to really get this. We weren't expecting this at all, guys. Trust me, okay? So the way that we broke this down right here was that we originally thought that this was 1, something like that was 2, and this could have been 3, that could have been 4, and that was an extended fifth wave within that subwave right there, okay? But that thought was pretty much so wrong, and instead of thinking it like that, we ended up reevaluating it, and we ended up seeing it was more so like this, where that's a 1, that's a 2, and then this makes a 1, 2, 3, 4, 5, so this is now a third. Okay, so if that was a third right there, then there's got to be a fourth coming to the downside. And I hate to say it to you guys, but the fourth is going to be pretty nasty, this drop. I'm going to guess around $14 first of all. And then we get a fifth one going to the upside, okay? But if that were actually true, then we got to say that, well, this wave 2 correction right here was pretty nastily small, okay? Because it was really small, we might need to take into consideration that it may not actually be the wave. So that's pretty important to deduce as well. But so if this was 1 and that's 2, right? That's 3, that's 4. This one made an exact 1618. Could that actually be a possible subwave going to the upside? And we have to say that yes, it is possible for now, and we must take this into account. So I'm going to go with a 6-hour time frame, and I'm going to say, okay, well, if that was actually really bearish, the retracement right here, or very, very short-lived, and this one's probably going to do a really quick correction as well, I'm going to guess. Maybe a few days only. I'm talking like 2-3 days, and then we rally up to over $20, I'm guessing. Okay, that's my personal opinion. So if I take my fib extension from there to here to here, I'm seeing that wave 3 is hitting a territory of about 4618. Now where's the 5618 region then, huh? So we're double clicking on this right here. We're going to look for the 5618 region, if there's even such thing, which I don't think is even possible right here. It seems more like if I take it from this trend-based fib extension from there to there to there, for example, 4618 to the 4764 region is right around 19 to, I'd say 19 to 20. We'll be, we'll give it a little bit of a clearance as well there, right? So if I'm only evaluating this particular wave right here, this one right there, okay, then we're going to have to say that these are the particular subwaves within this third degree right there, which we're going to go over together. So this one must be 1, okay? That must be 2 from the A, B, C coming down. 1, 2, 3, 4, and the 5th in the channel. And this is a corrective pattern right there. Bounces off the 55 EMA. And now we're finishing off this 5th and final subwave of the third larger degree wave. Okay, so I'm going to focus only on this particular section right here. And I'm going to delete kind of everything else that's in the way right now. So then if I deduced, okay, for example, this particular wave right here, watch what I do, watch what happens when I do Fibonacci extension. This one also does an exact 1618. Kind of funny, right? What does that remind you of? Well, what it reminds you of is when you take the first to the second, right? First to the second Fibonacci extension. This third wave in particular did a 1618. So if you think of it like that, when you take the fib extension from 1 to 2 for the third wave and you get 1618, well, what does it mean if you take a fib extension again of 1 and 2 and you're also getting a 1618 for the same third wave but in a different subwave? It just means that these patterns are actually very evident, which means that this must be the third one. Therefore, this one right here, if that was the third and that's the fourth, then that must be the final fifth wave going to the upside. So if that was the final fifth wave going to the upside, okay, then we're actually going to be in a very bearish market right now soon. And the reason I say that is because the 30-minute chart, or sorry, the 3-hour chart, this candle right here was a bearishly spinning top, followed by a doji / hanging man style candle, followed by a shooting star. So this psychology right here, it implies that the bears have taken over control, if not fully. Okay, so here the bears are driving it down. They open right there. The bulls tried to push it up. The bears drove it all the way back down, but the bulls defended with an open right there. Right? Sorry. They opened here. What most likely could have happened was the bears pushed it all the way down, and then the bulls defended all the way up, pushed it to the top of the wick, and the bears pushed them back down. Hence why the open right here is higher than the close, of course, right? So here, what must have happened was the bulls tried to push them up, but the bears pushed them all the way down, and then by the end of the candle close, the bulls pushed them back up. But what this implies is that right here, the bulls were constantly attacking on the offense. Bears took a little jab at them, but the bulls defended quickly again, right? and then open right there. Bears tried to push them down again. Then the bulls completely pushed them to the upside, really high. Bears defended, and then closing right over there. So here we're getting a series of the bears just slightly jabbing at them, but not really making a big attempt or big dent in them. So now what we find end up happening is that the bulls have kind of reached their climax right now, and there's just based on price. It is not me. Don't take it the wrong way, guys. It is not me that's saying that we're bearish. I am looking at the price action right now, and you guys can clearly see from the stories that we tell that the bears and the bulls have been fighting all day and all night and all year for the past 5 months especially. And what we're seeing is that this candle is called the get you fucked up candle. Okay? There's going to be that one candle, it's called the fuck you up candle. I apologize for my language there, but think of it. It's called the fuck you up candle. You're not going to trade against a shooting star. That's crazy. Especially when the shooting star ended up rejecting on a wick, 5%. Pretty scary right now, right? Here are my alerts that I've set up. I don't think we're going to be pushing above that right now. And if we do, only slightly. This is so cool, these alerts, if you guys don't know, right? So now this has got to be the 5th wave. So we're going to deduce, now we're the 3 hour on a smaller time frame. Okay, so now what we're going to say to ourselves is this. Check this out, guys. It's lesson time, man. Honestly, if you guys don't have my course, you guys better pick that shit up. Because I know for a fact that this video right here is over a lot of people's heads, right? You can't just simply go into the market and expect for you to kick somebody's ass like mine. If there was 5 of me versus maybe 5 of newer people in the market, you don't want to be trading against us 5. You know what I'm saying? So the best thing you guys can do is legit invest in yourselves. Get education, and by just whatever, just go to YouTube, read a book, right? Just watch tons of videos. Every time you watch a technical analysis video and you don't understand the terminology, Google it. I'm dead serious, okay? Anytime you don't understand anything, Google it, and it's eventually going to stick. For me, it got to the point where I didn't know what RSI was, for example, right? And I had to watch like 10 videos, and after Googling it 10 times, it started to make a little bit more sense. And eventually I started Googling it less and less and less and less and less, to the point where I started teaching myself much more advanced methods of RSI. So even if you don't, understand, a lot of you guys are students. A lot of people are doing this part-time, right? Because it's alluring. And I know that money can be tight for a lot of people. So my best advice I can give people, guys, is to make sure that you're just investing in yourself in some way in terms of educating yourself and providing value to yourself, because you want to make sure that you're coming out ahead with equipped information, right? You want to be able to fight back your competitors. It's a very competitive market. Oh, I'm sorry, guys. The audio is a little bit delayed with the video because I didn't set it properly here. So I hope that that's not too annoying to see that slight delay. Okay, guys? I'm sorry about that. Okay, let me show you something right here, okay, for the newer traders and I'm sorry for the advanced traders that know this already, okay? Elliott Wave 1, 2, 3, 4, 5 with RSI. You guys know what I'm about to say already, the people that are smart. In terms of the people that have taken my course. Wave 1 RSI, not that high. Wave 3 RSI, very high. And then 4 comes down, and then 5, not nearly as high. What this is basically referring to is a lower high that you're going to be getting on the RSI. Okay? We're talking about comparing these particular peaks right here. Let's just move this a little bit. Like that, okay? And this one here is right there. So we're comparing these particular points right here, where this one here and this one in particular is a lower high, but this one is a higher high than that one. Okay? So that's called simple definition of bearishly diverging RSI. Okay? Bearishly. So that's called bearishly diverging RSI. Okay? So we're going to look for a normal time frame and see if we can actually find it. How many times can we find this motherfucker bearishly diverging? That's the next thing. Okay? Do we find it here in the 12 hour? Is that a lower high? Yes. Do we find it on the 8 hour? Is it a lower high than wave 3? Yes. There and there. Let's make it a little bit more accurate so I can make these little lines for you guys to see. All you gotta do is compare these points right now. 8 hour, is it lower R side, bearish to diverging? Yes. 6 hour? Yes. 4 hour? Not quite. Not quite, okay? Actually, if we compare it to the peak for this one because of how it is, let's see, yeah. For here, if we compare it to the peak at the beginning, yeah, I'd say so. So on a higher time frame, for say 6 hours and up, we are definitely bearishly diverging, okay? But maybe on the lower time frame, we're not quite yet because we're not in the corrective pattern. Makes sense? Okay? So just based on our conclusions thus far, we're fucking bearishly diverging. Okay, do you guys want to know how I was able to call $17.20 range? Okay, you guys know that I was only off by literally 3%, right? Here's my tweet. Check it out. Check this out. I don't remember where it was. 17.2. Right here, guys. Maybe I throw over to 17.2. Okay? You guys want to know how the fuck I got that? Do you guys actually want to know how the fuck I got it? Let's go, man. So we confirmed everything already here already. Okay? Let's break this down on a really detailed Elliott Wave. Right here, okay? Let's just do this right here. On like a 2 hour or something like that. Let's show you guys a little bit of skills coming up. I got skills, it's multiplying. This is most likely right here. I'm just gonna consider this as an ending fifth wave of some sort. They're really, really fucking quick and I don't care. Leading first wave diagonal type structure, right? Where it ends up breaking out of it just by a small amount there, perhaps. Either way, it's wave 1. And we know that that's wave 1 because if we take our fib extension right here, our fib extension ends up landing right at 1618. It's like, whoa, what the fuck? Did you actually just get 1618? You guys want to know what I'm at? Where my position is, man? Honestly, I'm in a short position right now from... I've gone into so many positions. I was out for dinner, right? With the lady. And I went from a long from 1618 to... And I just put a limit order for 1655. That was kind of cool. Right here. I'll show you guys it all, actually. Right here. So the first short was from 1682 to 1622. It was the second one. I didn't catch the first one, right? It's tweeted somewhere below. The next one I went out for dinner, 1617 and 1655. Ooh, another short, right? And then I sold it there because I didn't think it would get that much higher. And I entered a short position when I was at dinner around 1670. So I'm in quite a massive position in terms of profit right now. Okay? So now we say that this is 1, that's 2, that's 3, that's 4, and now this is the 5th wave, clearly going to the upside. So we say to ourselves right there, okay, this is how I knew it would be roughly $20. You guys might not believe this, but man, it's so easy to be able to deduce this when you think about it, okay? If we say to ourselves, okay, well, wave 3 is 1618, there's no way it's going to go any higher than this one, 2618. Because this 5th one couldn't be extended anymore. Therefore, we take a general range, okay? We take a general range of in the middle. Make sense? Or even higher, or close to it, roughly. Just a general range, and we can extrapolate that even further, okay? And I'll show you guys how that was directly derived. We know we would have double top out here, okay? Check this out now, okay? Now that you've seen that we can get up to, say, 1790, pretty fucking close, wouldn't you say? We're going to go down to a really low time frame, okay? You're going to go to a really low time frame, and you guys are going to do this right here. Check this out, man. You guys already know which one we're going to be on, this particular wave. Okay, so this is the wave 1 territory. We can assume an ending 5th wave diagonal. Would you not say that after these guys were formed, you could have just stretched out that motherfucker? Yeah, you know you could have done that. Okay, and you can assume an ending 5th wave diagonal of some sort in there. Right, you can just even go something like that. I don't even know if that would be appropriate to do, because this was at midnight, right? Oh no, that wasn't appropriate at all to do. Okay, so this one fell out of it. It wasn't really an ending fifth wave diagonal, right? But that's okay. Did it fall to any other formations? Right? I was just gonna say assume motherfucking parallelity at first, okay? Because I originally thought it was gonna be an ending fifth wave diagonal, which clearly I'm wrong. Okay, I thought it was gonna be something like this. Let's say we go like a 30-minute chart. This one's truncated, just so you guys know, okay? This one's heavily truncated. So the way that I ended up drawing it was that was my 1. That was my 2-ish. Actually, no, I shouldn't say that. It's not fair. That's my 1. That's my 2 with the truncated C there. Okay. I think that this was a 1, 2, 3, 4, 5 going like that right here. And I think that this was my 4. And I think that that was my 5. That's legitimately what I thought it was, okay? At first. And I don't think it was an ending fifth wave diagonal of any sort. It just didn't really fit the criteria too well. At first I thought it was going to be. But it really didn't do that at all. So I completely dismissed it. But if I assume that, okay? If I assume that, it was actually a good thing as well. Because when you break it down further, this is what you get. 1, 2, 3, 4, and this one here, I thought was 5 originally, but I realized it deviated out of there. Double bottom for the C, and made the one more final wave to the upside. Makes sense, right? So then you take your Fibonacci extension right here, and what are you going to get? You get 1618 again, and the 2618. Bam! Seems like 1618 and 2618 extensions are very fucking common here. Alright? So then we finally break out of here entirely, and now I was going to say that we could have to assume parallelity. Bam! We just counted all motherfucking 5 subwaves like a boss. And we have now concluded, based on basically all bearishly divergent RSI on the relative strength index, that we're going to the downside. And we have completely entirely broken formation already, and we've confirmed it on large degrees that this is the likelihood of the top that we're going to see. Therefore, next one that we're going to see is 55 EMAs completely broken. So the next option would be the 200 EMA somewhere on the 15-minute chart, or we're going to go with one of these ones, first of all. The most rational one, in my opinion, would probably be the breakdown of this particular structure right here. Okay? Something like that, you can easily argue. Okay? Then you go to the 30-minute chart right here. Probably not that one there, I'm guessing, probably the 1 hour. It just seems more like this one's gonna do something like this. Like that. Where this line is gonna just go boop. Whoops, my mistake there. And this one could probably go down something like that. That's why I say $15.50 is most likely a very, very viable support. Okay, so then if that was actually our support right there, we go to the 4 hour, and if I'm right about that being 1, it's literally the most ugly one that I can think of, and it's almost hard for me to believe it. So I'm gonna have to take this as well, right? I'm gonna have to take this as well as my possible 1 wave right there going to the upside. So if this was actually my first wave, this one right here, we say ourselves that's pretty bullish. It barely retraced 382. Alright, so now if we adopted that type of conclusion, we gotta say to ourselves, if this was 1, 2, and 3, and 4, well, then there's gotta be one more wave going to the upside. And this one's actually gonna be very short-lived. Probably get down to about $15.50 anyways, and still the $20 range. So either way, I'm incredibly bullish right now on Link. I'm very, very bullish on Link, okay guys? And for the second time, I'll say it, or third time rather, that support is most likely around the 1550 ranges for short term only. I'm not saying to long it there, don't ever take that the wrong way, okay? But I'm saying that we're going to get some sort of reaction in the market at 1550 just because of where everything is standing thus far. Okay, 1550 is going to be a very, very viable number for us to be paying close attention to, right? And these ones are pretty bearish candles to me. So 1550 is where it's at, and then once this entire structure's correction happens, right, We don't know if it's going to be of that structure only. If this was actually 1, I really doubt that that's 2, to be quite honest. And that was 1, 2, 3, 4, 5. And if this right here was 3, well, it would make more sense to guess for us to get to even 1360 or 1230, and then 4, then 5. But at the same time, that's so tiny. So it's really fucking hard right now, guys, to honestly deduce this right now, okay? So I'm just going to be trading this based off of price action for now and go from there. But my first support is $15.50. And if we hold there, I've got no idea what we're going to do next, okay? All I know is that the last and final wave is targeted for $20, okay, based on what I said earlier. So I'll keep you guys updated, and I just want to catch you guys up with what's going on for the night. Take care. I'm really friggin' tired right now. This technical analysis video took about 40 minutes total because I kept pausing it and getting a drink and stuff like that as well to relax. Okay, good night, and I'll see you guys tomorrow.